Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, first off, just want to thank those of you guys that stopped by last night for our coaching session. It was a really good hour and a half, just conversation about all sorts of stuff, right? Talked about the state of the market, talked about trade targets, which I'm going to get into in this video, talked about upcoming ideas and really what's on the radar. I really appreciate you guys stopping in. And I'm looking forward to this upcoming Mondays. I mean, really perfect timing in the sense that they both fall back to back on what will probably end up being like the two busiest weeks of earnings season, right? So just a really great opportunity to like talk shop while all of the action's going on. So get into today's video. Really, it's kind of just going over an idea that we went into some length last night, right? Which was selecting trade targets. How do you select your trade targets? And long story short, there's basically three ways. It's either technicals, extension levels, or profit levels, right? Profit analysis. And each trade will have some unique characteristics, and each trade will be a little bit different. But generally speaking, 95% of my targets are basically, rise out of like those three areas or a combination of those three. And, it just so happened that one of the trades that we did for earnings this week, AGN, right, which reported this morning, it kind of fell into that category. So, how do you get the targets, right? So, what I like to say is you use what the stock is giving, or you use what the market is giving, right? And when I was looking at Allergan going into earnings this week, I saw that it was just basically bumping up into this 160 level, right? So you can see that it had a big bounce, bumping back up into what had been pivot resistance, right? Pivot resistance in December, held it, bounced, held underneath previous support, and then that set up this massive flush. So when it rallied back up, I knew it was at a significant level because I had been watching it. There was actually a trade open for this rebound. So when it was at 160, I knew it was a significant area, and I knew that earnings were coming up, and I thought that it was a nice setup for strangle in this case, because the options were only priced in 7.5, but the stock really seemed to have visibility for 10, right? And with it like 157, the reason why I thought that, right, 157 and 158 was because you have really obvious moving average levels kind of bracketing the stock in both directions, right? So first off, you have this, right? So kind of like a gap resistance around 170, and then you have the 200A and the 100A are both in play in like the high 160s. So you have like a really well-defined area of resistance above, a couple moving averages that it hasn't back tested in several months, right? So, I mean, from 158-ish, basically where it went out yesterday, you're looking at about like 10, maybe 11 points higher, right? 170, maybe like 168 to 170 area, right? And then on the downside, you have the 20-day and the 50-day, which are both kind of in a range around, say like 149, right? So that was about 9 points on the downside. I say 9 points give or take, right? So 9 to 10 points lower, 8 to 9, say like 9 to 10 points higher, right? Options are priced in 7.5. I wasn't expecting like necessarily a repeat of last quarter where it moved. I believe it was about 16 or 17. So that's why I thought spreads either way were smarter strategy. Kind of get contracts closer to the money, lower the upfront net debit, right? So this trade was a strangle, but went with a call spread and a put spread, right? So kind of puts spreads on either way. But then when it gapped lower today, I mean, you can see what happened, and this is what I was talking about last night again. With the rise of algorithmic trading, with all these black boxes programs, these moving averages just become so much more significant, and they're almost like magnets for these stocks. So yes, it ended up trading above it and below it, but what you can see is that for the most part, it spent most of the day chopping around, right at it, right? So that's why, I say take what the stock gives you. And in this case, like these moving averages, sometimes it's different areas. Sometimes it's key resistance, key support, right? But you look at the chart and you take what the chart is giving, and then you formulate a trade off of it. So sometimes there's no trade. Sometimes it's just, like if these moving averages were about 5 points higher and 5 points lower, then I'd be say, oh, you know what? It seems like, there really isn't a trade here. But because they were both in either direction, they were both like 8 to 10 points higher. I thought, it's a nice pivot point. There seemed to be visibility for an 8 to 10 point move either way, right? Versus the 7.5 that was pricing in, and it lent itself to a trade. But again, it's formulating these targets, looking at the price and move, right? Formulating the targets, and it's based off like these technical levels. So, obviously, options trading is a little bit of a different beast, but it also requires some technical analysis capabilities. And if you're not familiar with it, or you feel like you're not up to speed, it's definitely worth brushing up, because a lot of my trade ideas kind of arise out of a combination of both option analysis and technical analysis. So that's really how I find a lot of my trades into events and catalysts. So again, I thought this was like a good opportunity to tie it back into what we were talking about last night. And once the trade happens, then it's about managing, and that's a different story. But you have the targets, and if it plays out, then you cut risk, and ended up rolling down a little bit too. But it's just about having a game plan and executing the game plan at the end of the day, right? So tonight's going to be super busy. Tomorrow is going to be even busier, and tech. It's going to be a tech week. I mean, today was more industrial focused, but the remainder of the week is really going to be tech heavy. So, if you are a tech trader, or if you like trading tech stocks, be prepared, because there's going to be some pretty wild action. So if you are trading those or plan on trading those, best of luck. Also, as always, I'd love to hear from you. So, whether in comments in the video, or reaching out directly. I'd love to hear what you think about upcoming trades, or if you want to pick my brain about upcoming trade. Either way, love to hear from you. So have a great night, and I'll talk to you guys tomorrow.